Mark, welcome to the Strong Wealth Podcast. I appreciate you taking the time today.
Thanks for having me. Pleasure.
Absolutely. Well, let's start with just a little bit about your background and Bitcoin journey so everybody can get to know you a bit more before we dive into the specific fun stuff that I want to talk about today.
Sure. I am not, in any way, someone that grew up with the crypto or within the crypto ecosystem. My journey really started in traditional banking, and that's where I kind of cut my teeth. Very traditional, working on the lending and kind of treasury side. I wound up um, in 2012 being able to go work for a nonprofit organization that did international development work. Specifically, they had secured a large donation from Ray Dalio's foundation, the Dalio Foundation. And what they
Mm.
wanted to do was they wanted to make micro loans to people in developing countries. And so I had the chance to go down to Haiti and find ways to loan money to people who lived in, the most rural places on earth. And shortly after I got down to Haiti, I'm literally in a jungle. This is probably 2015. I realized that I had no way of actually getting these people this money. The banking system, the infrastructure of the financial system in developing countries is obviously terrible. And so I began looking for ways to move, well, I guess Haitian good or just money to
Mhm.
people. And so I stumbled upon this decentralized blockchain payment system known as Bitcoin. And I literally found out that that was the most efficient way for me to actually disperse funds for these loans to farmers, furniture makers, clean water people, just, extremely remote populations. And so that really started my interest in the nature of money, the nature of centralizing forces. I had never, it's funny, I spent 10 years in banking prior to this, but never thought deeply about M2 money supply, going off the gold standard, et cetera. So I'd say my journey into Bitcoin came out of the TradFi world, really, catalyzed by a need to figure out how to move funds in less developed ecosystems. Um, and so that kind of, when you get orange pilled that way, it tends to stay with you for a long time. And so I'm still very much a proponent of Bitcoin. But I think what's happened to Bitcoin in the last few years is certainly not the vision that I had, let's say 11 years ago.
I can imagine, and that's definitely what I want to get into more. But it's interesting before we get there, it's interesting that you came to Bitcoin through the practical application of Bitcoin rather than through a financial system, understanding fiat and how Bitcoin compared to fiat, which is how I approached it. Being in the wealth management space, for myself, it was seeing Bitcoin price action and wondering what the heck is this thing, and then
Mhm.
approaching it from that perspective. But you actually, kind of boots on the ground, saw a very specific kind of you know game changing, world changing for these people use case for Bitcoin. So that's cool because I did not know that about you before.
Yeah, I think a lot of people that got into it, I think most people got into it either for the price action or because they, have a particular uh, political or economic framework viewpoint. So I needed a way to move money, and now it's funny. I've actually, Mitch, no one's ever pointed that out, but you're correct. I'm probably in the minority that said I had a problem and Bitcoin actually solved it, and that's how I was orange pill. That's interesting to think about.
Yeah, because I feel like so many people today, I should say Bitcoin haters, if you will, they feel like there's no problem that Bitcoin actually solves. It's this
Mhm.
kind of made up internet fund money that why do we need it? And it's interesting that you within the banking system didn't come to Bitcoin from that direction. You actually, experience firsthand why we do need it. At least one reason why it's beneficial. So that's great. Let's dig deeper into how you left off your background with the changes in Bitcoin over the last 3 years, because that's what really made me want to have a conversation with you. So I want to go back to our X exchange on April 10th to start. You posted, "Has anyone considered that STRC is simply a psyop to distract you from Bitcoin's 5-year CAGR of 3%. Now, maybe we'll have time for STRC, but I do not want to get off on that tangent because we probably will have some similar feelings there. But um, in response to that, I said, I asked you if you were concerned that the 5-year CAGR was so low, and you responded with, the Wall Street industrial complex has diluted the ethos, sentiment, and returns forever. I asked if there was a way we could undo it, and you said, I think it's now just an allocation game. All the hopes are that institutions allocate 2 to 5%. That is a tremendous amount of money, but S&P and QQQ like returns should be expected going forward. And that really struck a chord with me because in a lot of conversations that myself and my business partner are having right now, I mean, we're managing money for folks, and we had the same feeling that Bitcoin going forward may look more like an index fund from a just strictly return perspective. Will it be the best performing index fund? Most likely, in my opinion. But risk adjusted returns may not look so good. And so we were becoming a little bit skeptical, to be honest, not leaving our Bitcoin conviction by any means because we work with Bitcoiners, but it was just good to question that. And so when I saw you questioning things as well, I was like, huh, here's somebody else that, may think similar to me. And I want to understand how you came to this. So where did this idea originate from, and when did this start for you?
Yeah, that's a good question. So, several years ago, this is let's go back to maybe 2019. Um, I was extremely passionate about, because of the point that you made about Bitcoin being a solution to a problem and not just something that you can trade or have liquidity with. I actually met the CEO of a bank here in Florida who really had a vision to ask the question: how do you begin to integrate the blockchain crypto rails into the TradFi system? And we had a really great conversation. And he wound up hiring me and said, "Look, I want you to build within our bank, which was state chartered, FDIC regulated. I want you to build a business unit that really caters to blockchain developers, miners, people who are looking to do ICOs, things like that." And I said, "That sounds like a dream job." And so, yeah, like, where do I sign up? And so I left the job I was at, and I really tried, to build it out. At that time, you have to understand the context. This is under Biden was the president, and the SEC and all the OFAC people were still there. FTX at this time was the dominant, centralized crypto exchange. Celsius was alive and well. Terra Luna was a hot crypto at that time. And so you had huge amounts of energy in the space, but you had no legitimate institutional, I'd say, interest, because there were no institutional rails in place. So what I tried to do was work with the FDIC and our primary regulator, which was the FDI, or the Federal Reserve Bank of Atlanta, to understand, let's start with one product. And so we built a Ethereum based payment system that would allow real-time settlement of bank-to-bank, account-to-account transfers 24/7, 365, essentially disintermediating the Fed wire system as we know it. We worked with a company that basically private labeled that technology to us. And we brought it to the Fed and said, "Look, guys, we want to roll out and make available to our customers this blockchain based payment system." And they looked at you literally like you were going to begin money laundering for Al Qaeda, like, on day one. And there was huge amount of resistance, and really beyond that, when you read when you actually read at that time what had been written by either OFAC, U.S. Treasury, the regulators, there was no framework in place for banks to be able to get their arms around the risk and the procedures around a blockchain-based payment system, let alone custodying crypto, providing leverage on crypto. This was very early days. And so, all that to be said, as I began to sort of try to build this narrative within the traditional world about the benefits, to your point, I realized it was going nowhere because there were too many entrenched interests around the status quo. And that only kind of piqued my curiosity. And I guess you could say maybe more zealous to make this happen. The challenge was FTX then crumbled, Celsius crumbled. And basically it was evident at that time that it was just not going to happen. The world was not ready for the integration. Obviously, things are far, far different now. You can talk about the Clarity Act and all those kinds of things and having the current president and the policies and all that, but we're still a long way off for a variety of reasons. And so I think to get to the ethos of your question, when I joined the bank and I was going to all the Bitcoin meetups and I was really actively involved in the developers, right? People who were building on chain, building out protocols, the early days, there was an energy and a passion within that group that was anti-institution, anti-Fed, anti-government. And those are the core ethoses of Bitcoin, right? Decentralization, self-custody, decentralized ledgers. That is not at all what we have today. All we have done is allow centralizing forces and governmental forces to invade the space. And I believe as a result of that, now that Bitcoin is basically now owned by the orange tide intelligentsia class, what you're going to see is you're going to see, basically to your point, index-like returns. It's a $1.5 trillion asset primarily owned by hedge funds, Wall Street ETFs. Retail has long since moved on because the core tenets have been abandoned, right? You used to go to a Bitcoin meetup and it was all about individual sovereignty, Austrian economic theory. Now it's all about digital credits, NAV, and the next ETF that maybe we're going to incorporate some income because we're going to sell calls and puts against the ETF, the whole underlying Bitcoin. That's not what I signed up for. So that's a long-winded answer to say, I think if you look at where the energy is, all the energy that made Bitcoin what it was is now gone. Bitcoin's the only asset class in the history of humankind where the capital base was inverted, where it started with individuals, and then flowed to Wall Street. That's now been turned upside down. And that's a shame because it was way funner, way cooler before IBIT. And I probably should, stop that rant right there.
Want to retire soon, but you're unsure how to manage Bitcoin volatility, avoid selling your stack, and generate income from your portfolio? Imagine heading into retirement knowing that no matter what Bitcoin does next, runs to new highs, drops 60%, or chops sideways for years, you're good. Your income is secure, your stack is intact, and you're not losing sleep over it. That's what Strong Wealth offers retiring Bitcoiners like you. Book a free discovery call today at strongwealth.net to find out what retirement can look like with the right plan supporting it. Go to strongwealth.net. Now back to the show. Sure. No, I completely understand. What makes you think that retail is gone, though?
Yeah.
Because, I mean, as far as I can tell, I mean, I don't do a lot of deep research into this, to be honest, but
Mhm.
based on what I'm seeing, it still seems like the majority of Bitcoin is held by individuals from the earlier days. Maybe you're seeing things that I'm not, or having conversations that I'm not. So, what makes you is that just kind of like where we're headed, or we're already there where it's primarily owned by hedge funds, ETFs, and MSTR or whatever
Yeah.
else you want to
So,
throw
Mitch,
in
I
there?
think a lot of individuals who bought before the ETF, and I think it's important to separate Bitcoin into two epochs, pre-ETF and post-ETF. I think a lot of, a lot of diamond hand retail investors have held on to their Bitcoin, probably in private keys, and it's hard to track those transactions unless you're actually in the ledger. But I think, like look at yesterday, right? Robinhood reported earnings yesterday. This is just one proxy. Crypto trading volume was down 35% over the same period. Now, but where did that money actually go? Right? Prediction market trading volume was up 55%. So any measurable component that I see in terms of, for example, the IBIT, let me look at IBIT. Funds flows are averaging around $1 billion a month net inflows into IBIT. In any
Hmm.
given day, $10 billion of zero dated options are traded in the public market in any given day. and you're talking about Nvidia, just the largest, most liquid stocks. You got what you have now is you have a complete change in optionality for the retail investor now that you didn't have 10 years ago, right? 10 years ago, even 8 years ago, you didn't have what we have now. You didn't have 2, 3x leveraged single stock ETFs, prediction markets, sports gambling. You didn't have all the options and the availability for quote unquote retail to make trades. There's only a finite amount of capital available to retail investors. And if you look at what they're buying, in terms of the data that I see, they're not buying Bitcoin. I would venture to say it's likely that you would see more trading volume from retail betting on Bitcoin's price in a prediction market than actually buying spot Bitcoin, right? Or they're buying publicly traded equities of these digital asset treasuries, or they're buying the preferred equities of these companies. Because what appears to be is there's going to be a few individuals and companies that are going to suck up all the Bitcoin, and we're all going to live off some iteration of the underlying Bitcoin as communicated by some kind of a financial instrument, if that makes sense.
Hmm. Interesting. So do you think that the retail shift from crypto trading to sports gambling, et cetera, is primarily due to I guess let me back up a little bit. So, Bitcoin is now more accessible, let's say,
Mhm.
to people through ETFs, other instruments, whatever it might be, even MSCR companies that have Bitcoin on their balance sheet. I think a lot of retail does view that as exposure to Bitcoin,
Mhm.
even though I wouldn't say that you're not. I think we would both agree that you're not buying Bitcoin. So do you feel like the accessibility becoming more available to these people lowered the barrier to entry and required them to not have to do the proof of work to understand what Bitcoin is prior to buying? Versus a lot of earlier folks in Bitcoin, they had to go through that process to understand what this thing was, how to buy it, how to custody it, because there was only a few ways to actually do it, and you had to know what you were doing or you were going to screw it up.
Yeah.
Do you think lowering that barrier to entry is what's caused this kind of gambling nature without understanding truly what they own?
I mean, that's a really good question. I'm not sure exactly how to speak for, the retail cohort because that cohort's pretty complicated, right? There's a lot of
Sure.
people who use, you know, really sophisticated trading styles and systems and are probably classified as a retail trader. And so I do know this for sure from my personal experience. The hardcore Bitcoin people who believe that the white paper, which is only 11 pages long, is the single source of truth about Bitcoin and not a 150-page SEC prospectus about a preferred equity offering, that the white paper is superior, right? And it's superior in its ethos. And so those people, I think, are not the ones that are going to drive up the price or drive it down. Like they're going to be there forever.
Yeah.
What you don't have anymore, and you had this years ago, obviously you had a fervor of speculation based upon price appreciation. And so that's normal. But what you also have right now is you don't have the imagination that Bitcoin was in the general capital markets. Right now, if people think about, you know, what is the most, Bitcoin was highly disruptive, right? To my point that you started off the show with, how do I move money, right? This was a disruptive technology um, that revolutionized the way people can move money and self custody their personal property, their financial assets. That disruption, I think that curve has really fallen off. And what you're seeing now is you're seeing where's all the imagination, where's the fervor, where's the energy for that disruption, and it's so obvious where all that money's going, right? Quantum, the AI picks and shovels, space, satellites, lunar. I mean, there's so much more now that has disruptive, speculative impact that's readily available that wasn't 10 years ago. 10 years ago, you think about disruptive technology. This is the pre-chat GPT moment. You had Microsoft, Google, but they were kind of your legacy tech companies there's so much more optionality now to capture the imagination and the energy of speculative, disruptive technology traders. Oh, and by the way, I can now go buy a public equity of a disruptive technology and actually get a cash flow, balance sheet, and quarterly earnings reports. It wasn't like that 10, 15 years ago, or it was all in the private markets. I work for a family office. We get access to all kinds of cool things that typical retail does not. But now the retail investors, they can buy these closed end venture capital funds and get quasi exposure to the largest hyperscalers, the Anthropics, the Open AIs before the IPO. So I think the biggest problem we have with retail is that imagination, that fervor, that energy for the next disruptive thing. There's just so much more optionality now than there was during, let's say even a few years ago during DeFi summer, you know?
Sure. Hmm. That's fair. I didn't think of it that way. That's a good point. So when we're talking about, so obviously we're speaking right now to, Wall Street kind of killing the ethos. But you know, there is that large institutional pool of capital that, I mean, in your opinion, do you feel like Bitcoin, I don't want to say needed necessarily, but to achieve the kind of price appreciation maybe, or um, to get to the point where it is more massively adopted, did these institutional pools of capital need to come in to make
No,
that happen?
no. Bitcoin went from 0 to 70K before anyone on Wall Street even was able to get after it. And so, and I think that is what it was so special about it. And that was the ethos that's been totally corrupted and ruined by the orange tie intelligentsia class. You know, there
Hmm.
the conversations I had with Bitcoiners 5 years ago was about how it solves a Byzantine general problem. Now all you hear about is the next financial instrument that can be built on top. And so, to go back to your first question about my post, this is what I think has happened to your point with the institutions. They realized that Bitcoin will never be, and to some degree, I probably believe this too, will never be a true monetary system in the sense of we're never going to be on the Bitcoin standard. While it's a fascinating intellectual exercise, is highly unlikely to ever come to be without some kind of extraordinary financial event that the Federal Reserve and the government can't bail us out of, which has yet to ever occur, knock on wood, right? So what they've all realized is that what can it be? If it can't be a monetary system, and it can't just be another substitute for gold, or it can't be digital gold. Can it be something that we can simply derive instruments off of as a base layer, right? And that's where it's all going. Is it's all being watered down by the idea that it can be a digital commodity, but due to its properties of liquidity, the network, its speed, its tremendous network capacity in terms of it's a $1.5 trillion asset that trades 24/7 and has never gone offline. What can we do around it? What can we build on top of it? And I think that's where the story's going. And so as far as the underlying price appreciation, I just don't see how it outperforms I mean, the S&P over the last 5 years is up 72%. Bitcoin's about half of that. 5 years is not a short time horizon. A lot of guys on X talk about low time preference. 5 years is not low time preference. I mean, private equity funds only last 10 years, and they're considered to be one of the most illiquid of all. If you gave if the reality is, if you gave your money to a manager 5 years ago, and he came back and said, I gave you a 32% return, you fire him on the spot. But that's what Bitcoin's done. Why? Because it's so watered down now, no longer as a representation of an ideology of anti-centralization fueled by individuals. It's just another Wall Street widget. And I think because of that, it's going to be very, very hard for it to outperform over any long period of time going forward.
Hmm. Interesting. So do you think it's more ideologically driven or actually like market mechanic driven
Well,
with
it was
the
what it is, right? So what
go ahead.
caused it to go from 0 to 70 was the ideology around it, right? Everyone's like, look at this thing. This is what it represents, right? This is what it can do that's anti-establishment. Now it's fully within the establishment. So it's converted from the monetization of an ideology, which is what it was pre-ETF, to the ultimate capital-based layer to create financial instruments. That's my opinion on what's happened. I was on
Mm,
a panel a couple of years ago, right before this would have been in January. This is a few years ago. And I was asked the question, is the SBR a good idea? And because half the people in the room said, oh, this is a catalyst. This is a catalyst. Well, I said to that person, name one thing the government has ever owned and has made it better. And they couldn't give me an answer. So these people who say all we need is legislation and we need an SBR, we went from 0 to 70K without any of that. And so when you've got that many centralizing forces at play and that much instrumentation built on top, now you have options, forwards, futures, swaps, contracts, derivatives. It's going to muddle performance. That's just my opinion.
I guess when I talk about the 5-year CAGR being so low, to your point, I get the classic zoom out response, which you did reference earlier about Bitcoiners talking about being low time preference. I agree with you that 5 years is a long time period in the investment universe. I mean, like to your example, if you gave your assets to a money manager and they got you a 3% CAGR over a 5-year period, you'd fire them because they underperformed inflation significantly. They underperformed the markets substantially, and you get rid of them. But every time I get that response from Bitcoiners, oh, zoom out further, or you're cherry picking the time frame. It's like, or the other classic response is, well, if you were DCAing throughout that entire time,
Right.
and it's like it has to be looked at from just a slightly different angle. Like they're just grabbing at different perspectives in order to
Mhm.
keep the dream alive, maybe. And I don't want to get too negative about Bitcoin, because I still think there's we still have a large portion of our capital allocated to it. I still think there's a potential for you described that the system may never have a Bitcoin standard. Um, I feel like never's a tough phrase to use there. It might take a lot longer than we expect, but I feel like there has to be some point where this kind of fiat experiment that we're living through has to go by the wayside eventually, right?
Yeah. So if we sort of take that hypothesis and play that out, what you're ultimately talking about is a period of austerity regarding fiscal policy, right? So now you're talking about the government has to stop spending money so it can stop printing money, right? That to me, and that's a political decision. So when it comes to what's going to break the economy in terms of what's going to move us from a fiat standard to a Bitcoin standard, I think that's mostly going to be derived by a political decision. And I don't think that in the current environment, anyone in this country and the voters are no one is prepared to vote for a measure of austerity. So we keep spending, we keep printing, that goes on and on and on. But I also don't think that I also don't think it's realistic to think that the world's going to go off the dollar as the global reserve currency standard either, because we have the greatest economy in the world. There's no other option. We're not going to go on the euro to become the global reserve currency. As long as the world's strongest companies are based here and trade on our US stock market and contribute to our GDP, that's what gives the dollar, as it should, and I guess to some degree the US Treasury market, its stability, because those people are employed by Americans and we all contribute to that. And so I think betting on going off a fiat standard is sort of betting on the collapse of the US. And as an investor in a lot of different companies in the US, this is the greatest economy in the world. And this train is not stopping. So I agree. Maybe the Bitcoin standard does happen, but they're not even happening in our lifetime. And I don't want to happen in my kids' lifetimes either, because we have the
Right.
smartest people, the best companies on earth, the best technology, the best minds. They're all here. And a collapse of that would be, the quality of life would not be very good. I mean, everyone would say, "Oh, let's go on the Bitcoin standard," but trust me, your quality of life would be terrible. You wouldn't be able to buy anything. There'd be nothing on the shelf to pay for with your Bitcoin. So I tend to not go down the road of that dystopian, fiat collapse, the fourth turning, style ideology, which is it's seductive to think that way. But boy, if it actually happens, I mean, unless you're like literally in a cabin in Montana, and a lot of Bitcoiners say, I bought 100 acres in Nebraska and I've got guns and MREs, and that's fine. I mean,
Yeah.
but as long as NVIDIA, Microsoft, Google are in this country, man, like this train is not going to stop.
Yeah, I feel like that, kind of overnight collapse is not going to happen. For one, overnight at least. That transition period would be very difficult, a lot more difficult than a lot of us would be willing to accept for ourselves or for our family. To your point, um, I tell a lot of folks that I talk with that the biggest risk to Bitcoiners that are retiring right now, because that's a lot of who we're working with, are folks who
Mhm.
are retiring within the next 5 years or just retired, is that the thesis that you have in your head actually takes a lot longer to play out than you think. And I think what we're discussing here with the kind of dilution of the ethos, the ideology, maybe retail being distracted, and institutional capital looking at Bitcoin differently than the early investors or early adopters of Bitcoin did. All of these things are pointing to that potential reality where this does take a lot longer, and it almost lulls people to sleep in such a way where Bitcoin just gets ignored. It's like, why do I care about it? Because nothing's happening with it. Um, which is similar to me, and maybe you'd agree with this, maybe not, to what has happened in the gold and silver markets, where I feel like the prices of those monetary metals are pinned down for, or at least historically have been pinned down for decades at a time. And that can, I'm sure there's a multitude of factors. I'm not an expert in the market mechanics of that, but paper gold, paper silver, are a large driver of that. Do you feel like that is maybe a part of what's happening with Bitcoin too? Is the price of it is just going to be pinned down, whether it's paper Bitcoin or something else, long enough for people to kind of lose focus, and Bitcoin to, not be paid attention to anymore, and adoption really slows down because of that?
I mean, I think you've already seen that quite a bit. I mean, the gold frenzy that we had, that was obviously a speculative fervor that broke. And that's not, and that's, I mean, pull up a 25-year chart of gold. I mean, it's still performed very well. But the reality is that you're going to have 70, and you know this because you're in the wealth management space. Over the next, whatever, 5, 10, 15 years, you're going to have something like $70 trillion flowing from boomers to the next generation. And they're not going to be buying gold. And so where's that money going to go? There was a long time of people thought that that money was going to flow into Bitcoin, right? That people would want Bitcoin, and people do want Bitcoin. The question is, if if Bitcoin is nothing more than an allocation over a long time frame, just like gold would be, right? A hedge um, against reckless monetary policy, global debasement of currencies. I don't know how far that gets us. There's a lot of money out there in the world. But at the moment, I mean, if you look at performance, Bitcoin right now is an opportunity cost asset, right? So we have to weigh our own portfolio. And so every dollar that we put into Bitcoin, and that I do personally, is a dollar I can't put into another asset. And the reality is there are asset classes that seem to have really strong runways for the next 1, 3, 5, 10 years. And so I think whether or not you believe in the fundamentals from just a sheer alpha perspective, you have to ask yourself, what's going to be the better investment over the next 5 years? If I don't think that fiat's going to collapse in the next 5 years, do I really need that hedge in place? And if I don't, what else do I want to buy? And so I think it's possible, if there is going to be a fiat crisis or a currency debasement crisis, that I think is what would cause a fervor rally in Bitcoin, but that's going to be unpredictable. And what you can't predict is corporate cash flows and looking at balance sheets. And there's a lot of tremendous just companies out there that you can invest in. It's just a simple alpha return analysis.
I think that's a good segue into the next post that I saw from you that I thought would be interesting to talk about here. You posted on X as well on February 5th. You said institutions thought the ETF would dampen Bitcoin vol and avoid the pattern of 50% plus drawdowns. This move has blown up that narrative, meaning the drop from 126 down to 58, I think is as low as we got. This move has blown up that narrative. The fact that it happened with equities near all-time highs makes it worse. Demand for large institutional long-term holders has been destroyed here for years. Is this right in line with what you're describing here, where if you're a large institutional, asset allocator, and you're looking at the risk-adjusted return metrics of Bitcoin over the last 5 years, they just don't look very good compared to a lot of other asset classes, including gold, including other metals, and including a lot of companies and equities like you're describing. So is that right in line with what you were describing in that post there? Do you feel like institutions are looking at this and they're like, why would we hold this? Why would we buy it today and hold it for that long?
Exactly, right. So the idea was the ETF is going to reduce these 50, 60, 70% drawdowns because you're going to have institutional holders, pension funds, endowments, et cetera, who are going to buy and are not going to sell. There's two issues with that. One issue is even with the ETF, what drives these massive drawdowns is typically not spot outflows. It's the deleveraging of a levered longs on these centralized exchanges, right? It's not the reason you get these massive drawdowns on Saturdays and Sundays and holidays is obviously not because a pension fund is dumping on Saturday morning. It's because these exchanges are offering 100x levered perpetual swaps on Bitcoin. And when they get called, they're forced liquidated. So if you're a money manager saying, okay, I've, I've got capital at risk that's supposed to be, not, it's supposed to be more stable now they have the ETF. But with these derivative products and these leveraged perpetual future products, I can be down 9, 10, 11% on a weekend when I haven't even done anything. Oh, and by the way, in order to stomach that kind of volatility, I get a 5-year CAGR of 6% with that kind of vol. Like, forget about it. I mean, it just the idea that trillions of dollars are going to flow in when all of these large institutions, they have clearly defined investment policies and investment boards, and they say, we can't do this and we can't do that. If you're going to have a Sharpe ratio of 3 or 4 and you're going to underperform the S&P, that's a very tough sell to an investment committee. So you're going to have 3 times the market vol and half the return. That's what you've gotten with Bitcoin over the last 5 years. That's an impossible sell right now. And so I think, which is why, to go back to my earlier point, how do you distract people from that? Oh, you create digital credits no, never mind your risk adjusted maximum beta, maximum volatility underperformance. No, look at the yields. Look at these yields. I mean, like, they're not investment grade. You probably can't buy them because they're B minus or triple B, whatever they are. So I think there's this understanding from a lot of smart people who say, look, we realize we can't sell Bitcoin. We can't sell half the S&P at 4 times the vol. What we can sell is these really clever products that allow us to buy Bitcoin and give you yield because I have an infinite cash glitch selling my common equity that I can use to fund the Bitcoin buy and pay you your yield. And that's the game, I think, for the institutions is we can't sell spot Bitcoin, but we can sell yield. And that's why I think and you see this on Bitcoin Twitter, except for the hardcore hodl people, and God bless them, all the energy is in digital credit, yield on Bitcoin, because that can actually be sold at the moment. Everyone is going to take 11.5% paid twice a month. Doesn't matter what it is. It could be, it could be a dairy farm in Wisconsin. If it pays me that, great, sign me up. Until it doesn't pay me that. And then what happens? So huge risk, which is obviously why it's on investment grade, most of these products. So I think that's what's happening is institutions are saying, I'm not going to pay half the performance 4 times the vol. I'm happy to take a really nice, tax preferred yield product at a way above average rate. And then that company can go and buy Bitcoin and become the monster hoarder. And, over enough time, they'll probably do well via their common stock as MNAV appreciates over time. But again, this conversation this is not what we were talking about 5, 6, 7 years ago. The question I had was, how do I pay rural farmers in Haiti? Now the question is, can MSTR get back to a 2.1 MNAV? This is what happens when the orange tie intelligentsia class takes over the greatest non-Wall Street asset of all time.
So can it be undone?
Man, I think that horse has left the barn. No, I don't think so. There's too many vested interests now, right? I mean, look at who ultimately holds the Bitcoin. It's the largest firms on earth: BlackRock, Citadel, MSTR. I don't know what Strike's doing. They bought a bunch of Bitcoin. I have no idea. I'm sorry, 21. I don't even know if that company exists to even have a product. So no, man. Look, I want to be clear. I still dollar cost average every day, every single day into Bitcoin. My kids who are 9 and 11, I have keys for them when they get older. I am not bearish on Bitcoin as a way to hedge, invest, allocate, and produce returns. What I'm bearish on is these large amounts of people who believe that Bitcoin is going to go to $1 million a coin in the next 5, 10 years. You're talking about a 15x return. It's not going to happen. It's just not going to happen with the way the market's structured right now, with the optionality, the capital flows, et cetera. That's just nonsense. And what's dangerous, I think what ultimately is dangerous is mostly people who wear orange ties and do podcasts, convince people to lever up their Bitcoin, to get home equity lines of credit, to buy common equity, who promote this whole Bitcoin levered ecosystem. Go and max out a credit card. And it's just, that to me is insanity. And I think all of that in the next 2 years is all going to become undone. I think, to your point, that needs to be unwound, and that should be unwound. This maximum leverage campaign, because Bitcoin's not designed to be a leverage asset. What does the white paper say? It's a peer-to-peer electronic cash system. It's not the bedrock of digital finance. That's what it's being made to be, and that's why fundamentally, I don't love what I see within Bitcoin Twitter.
I can appreciate and respect that, absolutely. So the next question then, and I appreciate your transparency in saying that, to be fair, you're still buying every single day. You're still buying for your kids as a long-term, sounds like generational asset for them. So that pivots to the next, point I wanted to get to is how are you allocating capital then with everything that we just discussed? And this may be different in your professional life than in your personal life.
Yeah.
Working in the family office space, so maybe there's two different perspectives. I know that a lot of my audience and our clients, to be fair, are going to be thinking about this from a personal perspective. But I'd be curious to hear maybe both of your perspectives from the family office side and from your personal wealth side.
Sure. So from the family office side, when I got to the office, there was no allocation to digital assets, crypto writ large. So I spent the first couple of years educating the principles around what Bitcoin is and what it's not. As everyone knows, the amount of FUD in Bitcoin continues to be quite substantial, even though obviously it's legitimized now with what's happened institutionally. And so we're up to about a 5% allocation of our total assets, which is, that's pretty large because the total portfolio is a few $100 million. So there's a fair amount of money in Bitcoin. I don't see the family office going above maybe 5, 7%. Again, because when you look at what's happening right now with the AI revolution and all the things that are tied to it, there are simply better risk-adjusted return options from our perspective. Personally, I have way more of my personal net worth than 5% in Bitcoin because I view my net worth as a 25-year play, right? Is Bitcoin going to be higher than in this day in 25 years? 100% absolutely yes. But I don't know. Is it going to do 7% a year like the S&P? Maybe. Is it going to go to $1 million a coin? probably unlikely, but it's possible. But what I do know is the fundamentals of Bitcoin as it was conceived and as the Genesis block confirmed in 2009 are unchanged. And so my faith in the network and what it represents, because nothing, Bitcoin's unchanged. I mean, well, that's not true. There's been some forks and now we have this whole, debate about, the code. And I'm not in that world, but I know that there's a debate right now, and there's quantum, of course, and all of that. But the ethos is unchanged. And so what it represents is unchanged. So I will remain faithful to Bitcoin personally until something radical happens. And I'll continue to put a large amount of my personal net worth into Bitcoin because I still believe in its underlying story, but I'm not going to be buying publicly traded equities or preferred equities. That sort of capital allocation needs to go to, other sources of alpha beyond spot Bitcoin.
That's fair. So, when you're thinking about this, personally, you said this is a 25-year play. It doesn't sound like you're thinking about this from a purely price performance standpoint, though. It sounds like more so you're still trying to stick. Not, I won't say trying. That's not the right word I should use, but you're still choosing to stick to the ethos that you originally discovered Bitcoin through, and what Bitcoin was created to represent. Is that fair to say?
I mean, look, at the end of the day, I think all Bitcoiners share a few common tenets, right? General distrust in institutions, preference for personal sovereignty, particularly the ability to self-custody personal assets. And so that's to me is what Bitcoin represents. And so if I have the ability and the ability for my family to self-custody assets over a long period of time that are no different than any other custodied asset. I got a beautiful watch for my wedding a while ago. I'm going to pass that. That's a individually custodied asset. Watches are assets. I will pass that down to my children. I think Bitcoin is in many ways the same thing. It's an asset that can be passed down, self custody, that has value. And so, because that is unchanged, even though all the nonsense that I see out there, because that ethos is still there, I'm still super bullish long term, just not to the degree that a lot of people are.
Yeah.
It just seems highly unlikely that you're going to get outperformance of the most disruptive companies on earth through Bitcoin over the next 5, 10, 15 years. I hope I'm wrong. If I'm wrong, and that's great for me personally. But I think
Yeah.
when you look at the entire spectrum of, I know a lot of people who believe that buying the S&P 500 is a terrible idea. I'm not in that camp. I mean, the S&P 500 is one of the most incredible personal economic alpha engines of all time. And so, you can love Bitcoin and love the S&P 500 and also love cash flowing businesses with strong management teams with strong balance sheets. And so, I think, you know, I'm going to pass down Bitcoin, but I also hope that I pass down Microsoft and Google and SpaceX and all the other companies that I believe will be around in the next 100 years as well.
Mm. I can really appreciate that perspective of taking the balanced approach and being open to other assets. Because a lot of folks that I talk to, they kind of are getting their brain. I don't want to be too. Uh, I don't want to be too harsh, maybe, but I feel like our perspectives are being warped by the content that's being produced on Bitcoin X,
Mhm.
podcasts around Bitcoin. And I really created this podcast to offer a different perspective, a more less. Here's the way that I put it. I don't get paid for attention. I don't get paid for price predictions. I don't get paid to shill, the next STRC or whatever it's going to be. I get paid to actually give people advice on their wealth. And so I don't need the clicks to come in. I don't need to throw out these crazy predictions that are never going to
Mhm.
happen and lead a bunch of people astray. But I feel like there is a large cohort of Bitcoiners that are getting their kind of mind warped a little bit by this content and feeling like they have to be 100% allocated to Bitcoin or they're not a quote unquote real Bitcoiner. And I've never appreciated that. I've never agreed with that, to be honest. And so I'm curious to get your feedback on our approach with folks in real time. I'd be curious to hear what you have to say. So for us, when we're thinking through a client's financial plan, financial situation with their portfolio, we really view Bitcoin through two separate lenses. And the first lens is long-term savings. This is, to your point, Bitcoin that's held in self-custody. It's never traded. It's never touched. It is in cold storage, and it's going to be passed down to the kids for generations. This is also set aside for black swan events where, okay, yes, we really do need to have self-custody Bitcoin, not Bitcoin that's on Coinbase, not with an ETF, not held by MSTR, not really us. We really need the sovereignty that Bitcoin and only Bitcoin provides. And so we have a bucket of Bitcoin allocation that serves that lens. And then we look at Bitcoin also and have a separate allocation to Bitcoin that is actually a traded allocation. And you may not like this. I don't know. We'll see. But it's a traded allocation to Bitcoin, and it is through an ETF, through our custodian, our brokerage platform, and it's traded alongside other traditional assets. And so the approach that we're taking is, we help our clients identify what their allocation should be to the self custody portion, and then we also have a portion that is not passively allocated to Bitcoin. Let's say we use a trend and momentum trading strategy that I won't get into for this conversation, but this opens our clients up to owning other stuff. It can be commodities, it can be equities that still have real value, even in a Bitcoin standard world. I mean, the inputs to make real things are not going to lose all their value if Bitcoin standard plays out. Equities, companies, to your point, that are producing real things and providing real services to people, and providing valuable stuff to the world, they're still going to have value even if kind of the full extent of the Bitcoin thesis plays out. And so I get some pushback among the Bitcoin community for taking this type of approach. But in my opinion, what it allows our clients to do is they still retain their sovereignty with their cold storage allocation, but then they also are not just passively holding Bitcoin for these extended time frames, and when they could be owning things that have higher performance. I mean, I can't share explicitly our performance, but we've outperformed Bitcoin substantially, with our portfolio. And yes, are we holding Bitcoin at times when it has these, bull runs? Of course, but we're not just myopically maybe saying, oh yeah, you should just only own Bitcoin, borrow against it, or STRC to get your yield or retirement income. We're taking that kind of split approach. So I'd be curious to hear from your perspective, based on everything that we just discussed. What do you think of that? What do you think of that approach, just from all of your kind of asset allocation experience that you have, which frankly sounds like it's more than me?
Um,
All good.
yeah, I studied the greatest investors and even the greatest speculators in the history of the world, right? Going back to like Jesse Livermore in 100 years ago to the contemporaries, right? Drunken Miller, Buffett, anyone of that ilk. Even someone like Drunken Miller would say, I invest in a small basket, but I watch that basket very closely. I'm not aware of any investor over the course of time, even though I'm sure this has happened, who was able to outperform by holding a single asset and a single asset only. Now, I'm sure if someone bought NVIDIA 10 years ago and put all their money into NVIDIA 10 years ago, that would be a great bet. But you're making a pretty big bet. And so I think for the vast majority of people, not everyone, but for the vast majority of people who are looking to not only grow, but also steward their wealth, there's absolutely nothing wrong. That's not the right word, but there's nothing foolish with having assets, capital appreciation assets outside of Bitcoin, right? At the family office, for example, we're selective, right? As you would imagine, I get an email a day from a venture guy or a private equity guy with some great new thing. And so you do have to be disciplined. And so we have an investment policy. We know what we like, we know what we do not, and we are not all things to all people. There are certain industries, types of deals, leadership styles that we will never invest in. And so it's good to narrow your investment scope to what you think is important. I tell my kids, never buy a stock that you don't believe in personally. I'll give you an example. I had my kids do this exercise where, I said, okay, I'm going to give you X amount of money and then you can buy, you can each buy 7 stocks. And so we pulled a list of like 50 stocks, and some of the stocks that they wanted to buy, I said, well, you're not going to buy that stock. And they're like, why? I said, because we as a family, we don't believe in that company. Right. An example, one of them wanted to buy Roblox. And I said, no, we're not going to buy Roblox because we don't believe that that platform is simply a good thing for mankind. And so it's off the
Mm,
list. Where am I
sure.
going with all this? Anything that you have deep conviction about, you should invest in. And it's okay to have deep conviction about something other than just Bitcoin, right? There are amazing companies run by amazing management teams with amazing earnings potential that you can generate significant alpha from. And I think that the idea that Bitcoiners have this purity test, that you're an idiot if you buy Google, or you're an idiot if you buy whatever, I think is just foolish. Like these are not these are very smart people, and I'm not going to insult them or their intelligence. But the idea that you cannot put your money in anything other than that, I think is just absolutely foolish. It's not something that we would do, and it's not something that I would ever do. And I think it's reckless to put all of your eggs in one basket. And I think time will tell and prove that to be correct. Especially if your clients are old or nearing retirement, boy, I mean, that is, you'd be derelict in your duty to put them in anything. I don't care what it is. I don't care if you had inside information on the SpaceX IPO and you said, we're going to put them all in SpaceX. That, I think that would be enormously problematic for anyone to do that. And so why should Bitcoin be any different? It shouldn't be.
Yeah, I really appreciate that take, and I wish a lot more people understood that are kind of drinking the Kool-Aid, if you will, of Bitcoin X and the Bitcoin podcasts out there, because I've seen it get people in some tough financial situations because they're listening to folks that are not actually managing capital for other people. They're not
Mhm.
actually stewarding wealth well, in my opinion, and they are just entirely producing the content for to get attention, and
Yeah.
you can't take your financial advice from those type of people. In my opinion, you got to take sound financial guidance from folks who are actually in the game, like yourself and like us. So I really appreciate that you take that perspective as well, both professionally and personally, because I think it is very prudent for my audience, and I think it's prudent for 99.9% of people who would call themselves Bitcoiners. I think the only person that should be 100 the only person that I'm fine with being 100% allocated to Bitcoin is the person that kind of views it as a moral, ethical imperative to do so, and they don't care about their financial situation at all. It's just like, I think this is the biggest, moral, ethical stance that I can take in the world today, and I'm going to choose to take that stance with my capital. And if that's if that's what you want to do, sure, I can appreciate and respect that, but I just don't think that that's for nearly everybody.
Yeah.
So
I mean,
yeah.
look, at the end of the day, I view Bitcoin. There's two types of investors, right? Those that are trying to grow capital and those that are trying to steward capital. In the family office world, you're talking to people who have already made their money. Okay, they don't need to outperform the S&P, and they have other consequences like tax consequences, estate planning consequences, liquidity consequences. They have margin lines and access to liquidity on securities that is frankly superior. The reality is that I can buy a treasury bond and get 99% liquidity against it at less than Fed funds. You can't do that with Bitcoin. And so it's not all things to all people all the time. And so I think, as a general rule, everyone that wants to steward capital should have an allocation. I don't know what that number is, it's different. But everyone should have an allocation that wants to steward capital. If you want to grow capital and you have a long enough time horizon, then I think you have to have a Bitcoin allocation as well. A much larger allocation than if you're stewarding it. And so I
Sure.
think it belongs everywhere to everyone. It's just a matter of, to your point, what is your situation? And so the idea that every human being should be 100% Bitcoin might seem like that's financial malpractice. And that serves nobody well, because no one is in that situation except for a small handful of people, to your point, who either simply do not ever need the money, or B, do not need that money to grow at all and will never have a liquidity need to use that money. And that's
Yep.
it's not most people. So I maybe we'll just leave it at that.
Yeah, for sure. I think we're on the same page. Well, Mark, I really appreciate your time today. I appreciate you hopping on here and sharing your thoughts. I really resonate with your point of view, and I feel like, I appreciate the opportunity to be able to give you a platform to share that point of view, because I feel like the chances to share these contrarian viewpoints in today's day and age in Bitcoin is growing smaller and smaller
Agreed.
by the day, for sure. So, any final thoughts, or anything you'd like to point the listeners to connect with you?
Oh, as far as connecting with me?
Sure.
Oh, I'm not super active. I'm on LinkedIn. You can find me easily. I'm on Twitter. I use my real name and my real picture. I don't have an avatar, like alter ego. I don't. I'm not. Most of my time is spent, in my job. But I'm always happy to talk to folks who have questions. And even if you have someone watching that, represents a family office or some kind of an institution, we put a lot of time and effort into how we think about our investment policy and framework around not only how we buy and hold, but also how we allocate. And so I'd be happy to talk to anyone that's got questions or just wants ideas around sort of how do you, within that kind of a framework, do an allocation that, fits within a complex family office, trust, estate type environment. So happy to reach out to those folks, or have them reach out to me. But thanks for the time today, Mitch. I enjoyed it. And boiler up, by the way. Boiler up.
No way. Go Hoosiers. Thanks, Mark.
My
Appreciate it.
pleasure, man. Take care, buddy. Have a good
Thanks for sticking around to the end. I greatly appreciate it. I'm Mitch, the founder of Strong Wealth, and we help Bitcoiners retire early and stay retired without sacrificing their peace. If that interests you, head over to strongwealth.net to learn more about us and our services. And don't forget to subscribe to the show. We really appreciate you watching all the way through. I'll see you in the next one.